Today is the 3rd of May. Just to get the disclaimer out of the way, any advice or information given in the room is educational in nature and general advice only, and does not take into account your personal financial circumstances. By viewing any of the material or using the information presented by Bovarius Capital, you agree that it is general educational material and you will not hold any person or entity responsible for loss or damages resulting from the content or general advice provided here by Bovarius Capital Management, its employees, directors, or fellow members. Spot currency trading has large potential rewards but also large potential risks. You must be made aware of the risks and be willing to accept them in order to invest into spot forex markets. Don't trade with money you can't afford to lose. This website is neither a solicitation nor offer to buy or sell spot forex. Other financial products, no representation is being made that any account or is likely to achieve profits or losses similar to those discussed in any of these sessions. Past performance of any trading system or methodology is not necessarily an indication of future results. The information is purely for educational purposes only. Right, guys, welcome to the room. I hope everyone's well. I think we've got a little bit of a pullback from the dollar, which we were waiting for. Just looking at the economical calendar, just to get the ball rolling, we had the Fed rate decision last night, and it brought dollar yen down. It gave changed the sentiment on the strong dollar pull up. Obviously, the dollar's been strong for about 10 to 15 days now, and you're getting the first bit of the pull up where it's probably going to come back to find orders before it continues. Obviously, data dependent and news dependent. Now, looking at it today, Thursday, we got the ECB speech from Vice President in a few minutes, not really of major importance. We had the CPI this morning. Now, I just want to touch on this because a lot of clients that were trading London Open this morning had some unexpected movement about 9:30 off the back of the news. Now, same again yesterday. We had, I think it was consumer price index, CPI or something for Euro. There was definitely something out yesterday morning. I think it was ECB decision. You guys have to be taking into account when there's news in the London Open. Take that into account, guys. Yeah, because you'll get that unexpected move. Now, this one came in as expected. You got a little bit of move on the screen, but really it just invalidated some of the setups where it was a little bit choppy. So the order flow there was clear indecision, and with the news and London Open going on at the same time, it wasn't as clear as it could have been. Just making you guys aware. So do always check the economical calendar when you're logging in, when you're looking at it, because otherwise you're missing a trick. It's like going out without looking at the weather forecast. You're not sure what conditions you're going out into. Today, apart from that, it's quite quiet from news front, but tomorrow is massive. We've got non-farm payrolls. Now, this is the biggest economic piece of data for the US. It indicates the jobs that how many people are employed, and it gives an indication in regards to what the dollar is going to do. Now, before, non-farm payrolls was a lot more effective in regards to movement. You would see a lot more movement in the market in the sense where if you got a figure that was weak or strong, it would have a big move. Now, it's expected at 192. Now, don't forget the last one came out considerably out. In the run up to summer, the figures generally go back into line. In the winter seasons, they're a little bit out, but in summer and spring, they generally start to go back into line. So I'm expecting a similar sort of figure, 192, and I'm probably expecting a weak dollar. Yeah. Now that for you guys, just to give you guys some clarity, you need to look where it's going to push in to find orders to probably continue. Now this is something that we're going to look at again tomorrow, but it's just me giving some analysis as a trader, somebody that's been in the markets for quite a while, about how I would approach the following non-farm payrolls. Yeah. Now, at the moment today, I'm expecting the markets to move quite technically, just because there's not a lot of news out. So things are going to probably, technicals are probably going to be a lot more favored. And I think after the non-farm payrolls, it's quite quiet. Just looking at next week, just to keep ourselves prepared as of such, because that's what's crucial. You need to be prepared, especially as a trader. You need to be going through the news time and time again in the mornings, because it removes uncertainty and it helps give conviction with your trades. The more you read the news, the more you look at the economical data, and the more you look at the social news, it just gives you a better understanding of the fundamentals. And that only comes through time and practice for going through the fundamental events time and time again, and getting yourself confident with it. Obviously, as well, just to give you guys some like forward preempt, we've got Trump election, second term, crucial, and next year we're going to leave Brexit. So at the moment, there's no clear clarity on where sterling's going to go or where the dollar's going to go. There's two big pivotal events which changed sentiment last time. Brexit, no vote, gave sterling weak fundamentals. Trump coming into power gave the dollar a weak fundamental. So these are just things that you've got to understand. Obviously, the 4 or 5 major pairs, currencies, once you understand how they're moving fundamentally, you can apply them across each other. Yeah. Now, next week, if you look at it, you've got Bank of Japan have been off all week anyway, so there's been low liquidity in the yen pairs. Apart from that, Monday is bank holiday, guys. So across the board, it might be a little bit flat. Okay, US is still in the market though, so I expect Monday's London Open maybe not to be as good, but US markets are still there, so it's still tradable. That's why FX is one of the best markets to trade, because it's 24 hours. It moves while we eat, sleep, and breathe, so you can pop into it at any time. Now, looking at it, apart from that, next week, okay, you've got some New Zealand rate decisions that will move the market in the night, but generally, we've got Super Thursday. That's the major thing next week. So I'm expecting big moves tomorrow off non-farm payroll, and then this stuff for Super Thursdays is generally going to be in line. I don't think they're going to hike the rate. I think it's going to be in line in regards to the interest rate. And apart from that, you've got CPI as well. Just making you guys aware. So next week, Thursday, is a big week for the pound. I think you'll find the pound will pick up a bit more direction after Thursday's Super Thursday. Now, coming back across, because I want to start going through, get you guys to start reading some of the general information as well. Bloomberg, there's not really, it's generally quite when it's mixed across the news, like stocks have been quite big this week because of the earnings. I'm sure you guys saw Asda buyout Sainsbury's, that was massive. Just coming to BBC as well. BBC is quite good. Rate rise unlikely after weak data. Can you guys see how it's preempting? This is why you read the news. It's preempting us for next week. Traders will read this and they'll position themselves typically in the same way. That's why you read fundamentals. Yeah, it's not because it's a bore or you have to do it. It's because other traders, other professional traders look at the news and they interpret it and they position themselves the same way the banks do. At the end of the day, you have to react to what the news has, because that's what a trader does. You can't fall in love with the position and the news comes out and then it goes against you and you be there thinking, oh, I was unlucky. You can't look at it like that. You've got to understand the reason why the market goes up is because there was more buyers than sellers. The reason why the market goes down is because there was more sellers than buyers. You can look at it from as many angles and as many point of views as you want, this bit of news, that bit of news, but the indirect thing is that you were inaccurate about whether the buyers or sellers were more. Now, the quicker you guys can identify the order flow or direction, it will be a lot faster for you guys. Now, the problem with when you look at it as day trading, sometimes you'll find the pairs get quite choppy. We'll look at it on a chart anyway, but let's just look at this article because it's crucial, yeah? Now, I know recently I've only just touched on the outside of the articles. Now I'm breaking down. I'm going to go through it because this is crucial. This is prepping us for next week. Yeah, there was poor data, which I'm sure you guys saw, and it pushed the pound down. Yeah. Now, because of the data, it's unlikely that they will raise the rate next week, which was what they preempted. Make sense? Now, if you interpret that as a trader, in my opinion, that's strong sterling if they don't raise the rate. If they do raise the rate, it's weak sterling. Fair? Make sense, guys? Yeah, great. Now, reading through it, obviously the data has been coming out a little bit weak. That's why we saw that fall off from the pound. But if they don't raise the rate, it's going to correct the whole move. If that makes sense. So it's just making you guys aware of it so you guys can understand. So why is the data so poor? UK inflation falls, pound declines. Pound's had its worst month for a while. So is the euro. But I'm expecting, obviously, because the dollar was strong because of the treasury yield, so it goes hand in hand. But I'm expecting a continuation now from sterling. I don't see sterling trading at 132, 130. I just think there's good enough sentiment from Brexit. Unless some real bad stuff starts coming out, the technicals look too strong. I don't think it will get to that 130 amazing all-time buy. I just don't think it. I think it will edge higher. So this is why you guys need to be reading it. Yeah. Last month, official sugars show that it was 0% for the first quarter. Given weak economical data, we saw the Bank of England will be unlikely to raise interest rate at the next policy meeting next week, guys. Spot on. Now, this is getting you guys confident about what's going on next week. Now, you guys are going to be able to take this into account when you're holding positions. I wouldn't be falling in love with the sells. I'll be looking for the no rate hike and a continuation, but also I'll be looking where the orders are, where we could position ourselves before and during the news as well, because this is going to hold strength. If there's a weak interest rate decision, they don't raise it, you're probably going to see a strong sterling for a few weeks. This is what I'm getting you guys. I'm getting you guys to think like traders, to read the news, condition yourself. It's about preparation, especially when it comes to day trading, because the preparation where you don't take into account where the news is or where it's not can be the difference between a small loss or a big loss. Yeah. Now, fundamentals is crucial. I know I work on them quite a lot in the live room. It's just so that you guys get to a high level of understanding. You're only going to do that by reading, by going through the news time and time again. There's no shortcut to success, or no shortcut to getting the fundamentals. It's repetition. Practice makes perfect. Now, looking at it, manufacturing index was also down. So generally the data is coming out a lot weaker. That gives you an understanding that the fundamentals have been quite weak on sterling. So this is why you guys need to take it into account. So now we know, obviously, data comes out for each currency: sterling, euro, yen, and dollar. So you guys need to start to build a good understanding of what the fundamentals are doing according from what the news is saying. Because guess what, guys? It's reported in the news. Make sense? Great. Now, just going back, that's why I like the BBC, because it is quite relevant to what we're doing in the European sessions. Sometimes Bloomberg gets a little bit sidetracked and mainly focuses on the dollar, but obviously Bloomberg's is going to report on the biggest one, the dollar, but it does pull up the things across the board if it's quite big. Now, this is massive. That other thing, the data firm closed. The company that Facebook basically had the probe with have now shut down. They're like a multi-billion pound company. Just something to be aware of. Nothing really is going to move the financial market, the FX market as such, but it's always good information to hold. Apart from that, you've got a bit of stock news coming out. A couple of the stocks under fire. Talk Broadband worst service. Australian bank lost 20 million in accounts. I'm sure you guys have also seen the TSB scandal that's going on at the moment. They're having some problems with the computer systems. I'm not too sure. Looking at Bloomberg now, not really much else out there. Dollar drops as focus turns to trade. Stocks, let's just catch the stock markets. About 11:30, 12 o'clock, Bloomberg releases something which I think is a must read by all traders, especially when you're going into the US session. It's 5 things that happen in the day. It gives you a good understanding of what's going on, if that makes sense. Now, apart from that, there's not really much else out there. Let's bring up the charts now, guys. Now, bear with me. The screen seems to be frozen. Nope, I've got it. I think I've got it. 1 minute, guys. The screen's... Ooh, no. Just bear with me 1 minute. I got you. Right, guys. Now, looking at it, just to go through the charts with you guys, pulling it up. Dollar yen. This is that massive move from dollar yen. It's pushed down. This is what I was talking about. The Fed rate decision brought the unhike of the US dollar rate decision clearly brought it down into these levels. Now, this is order flow. The market's choppy, but you can clearly see it's building up a position of sell orders here. It's not making higher highs. Now, this would give you an indication it's going to go back to find buy orders because it had that big move. Now, looking at it, it's on a daily time frame. It's pulling back. It's either going to come into these levels or these levels and continue going on. Yeah. So this is how crucial the dollar is to the market, because you guys can see from the movement in the dollar, look how strong it is, if that makes sense. It's quite strong. Look, I didn't think the market would get to these highs up here, but we're coming up to where we're going to start to see some sell orders come in across the dollar, and institutions are probably going to push the price back down. I wouldn't be surprised with the violence in this move if it pushes above. This looks like a liquidity pool here. Institutions, because of the violence in the move and how fast the moves moved up from the low, institutions are definitely buying down here and building up a position. So they're going to be pushing it through key levels. If they had pushed it through this level, you would have saw the market come back. It's clearly gone through. So there's clearly at the moment a lot of buyers in the markets for the dollar. Now that's replicated in sterling as well. When you pull it up, sterling and euro, you can see it's pushed down. It's got a little bit more, you can see. This is that 130 level we were talking about. 127 it's a must buy, but I don't think it will get there. I think it will push into these levels and continue, just because when it's moving fundamentally, it generally bounces off the mean. So if you're looking at it, it should bounce from somewhere around in these regions where it's at the moment. Euro pound's gone back to its old ways at the moment. A few weeks ago, it was moving phenomenally well. It is a little bit choppy. You're still getting the movement from it, but it's not as the ranges aren't as big. That's what I mean by it's gone back to its old ways slightly. So do take that into account. Euro pound's really good to get in bigger volume. Some clients, because the range is so tight, they go 2 lots, where if you're going 1 lot, you'll go 2 lots. If you're going 5 lots, you'll go 10 lots, just because the range is so tight. But be managing them closer. So let's just look at it from London Open as well. Go through all the pairs individually. Yeah. Now let's start with dollar Swiss, because obviously let's start with euro dollar. 15-minute time frame, 5 days. Yeah. Now this is clearly moving fundamentally, guys. It's clearly broken out of the zone. I would heavily want to be selling this. I would be all week, last week or this week. Now looking at it, as a trader, you've got to position yourself for the next week as well, and you've got to catch the next interim trend. I will be keeping into eye according to what happens with non-farm payrolls. If you get a strong non-farm payroll figure and it's a strong dollar, you could see it. That's unexpected, guys, as well. You'd probably see a bigger move down. But if the dollar figure comes out in line, I think it's going to pull itself back up and continue on its way. That's just me interpreting the data, interpreting the news, and using the price action as well. So I hope you guys now, like Stephen, Patrick and stuff, I hope you guys are getting a lot more comfortable with understanding fundamentals and comfortable with holding the positions where you're looking at views. Does that make sense? Just to get a bit of feedback. Can you guys hear me okay, yeah?
Yeah, I can hear you well, yeah.
Good, thank you, Patrick. Now, just to get a bit of feedback, yeah? Is there anything that you guys want me to I know there's only a few of you, 4 or 5 of you in the room. Is there anything that you guys want me to go through individually? I'm just going to go through London Open with all you guys as well. But anything that anyone wants me to touch on? I know I touch on the fundamentals quite heavily, just to get a bit of feedback, just to make sure that we're all on the right track. Anything that you guys are finding?
Yeah.
Tell me.
Yeah, the pound dollar and the pound yen. I just want to know what that looks like.
Okay.
So I had a few issues this morning.
Okay, what of the news when the euro news? Yeah. That's something.
Yeah.
Just that's a major thing as well. A few clients got caught on that as well. So let's just go through that now. This is the breakout this morning. Yeah. Where this choppiness here is clear. Markets are looking for orders. Can you guys see that? Yeah. So up,
yeah.
Sell orders, buy orders, sell orders, buy orders. Now, where the market's choppy like this, it's a little bit hard to trade, because if you don't have the future information, you can only predict on what the price action's saying. But because it's so choppy where it's finding orders, what that tells me as a trader is that there's clearly indecision between the buyers and the sellers. Does that make sense? Now, where the market is, looking at it from a 15-minute day analysis, it's near the all-time low. So going with the longer-term trend would be a buy. The shorter-term trend would be a sell. Now, if the market breaks down and is so violent, the shorter-term tighter stops should be able to take the move. And if the market moves in your favor, you catch the next counter trend. Now, looking at it, in my opinion, I wouldn't be falling in love with buy zones, not the first ones, mainly the second ones. But obviously, at the moment, we've got non-farm payrolls tomorrow, so I'm not expecting massive movements like we've seen this week until tomorrow. Does that make sense? Because there's no real news to give it that clarity. So that's why the news was so choppy this morning, where you can see there's no direction. There's no million orders, 2 million orders down here or here, because otherwise the price would have clearly gone one way or another. So it tells me that institutions aren't in the market at the moment. They're looking for a position, or they're looking to give clarity behind it. Does that make sense? Now, here, if we're looking at London Open, it's triggered. It would have taken you out. Trailing stops would have taken you out there, even if it was 3 or 4 pips. It should have taken you guys out. Yeah. It's unfortunate that it's come back, but don't forget that helps you to do the volume. Yeah. Now pound yen, because obviously there's one difference between pound yen and thing. Now this is crucial to how you can see it. You can see that pound yen's defaulted the level, can't you guys? Yeah. But pound dollar hasn't. Can you see that or not? Yeah. Now, the reason why that is because sometimes...
Oh, you broke up then.
Yeah, so what I was saying is, can you see how pound yen has defaulted the level? The level of support is there, really, and it's broken it clearly. Yeah? Where on pound dollar, it's holding it.
Yeah.
You see that?
Yeah.
Yeah? Now, to give you an indication is that's...
Okay.
As soon as you see a break like that, where these two go out of correlation, you need to look at dollar yen. Now, if you look at dollar yen's got a massive move to the downside. Can you see that? So you know at the moment, the market's getting driven by the yen. Now this is very rare. The yen only drives the market like 10% of the time. It's very, very rare. But it's clearly getting driven by that weak dollar pushing it down at the moment. Yeah? Now dollar Swiss, looking at it, is not doing the same. Can you guys see that? It's holding up. Are you with me? Yeah. Now I expect now for there to be a continuation on the dollar. So be wary of that. So with this, I'm expecting a reversal as well, because pound yen is holding up. So we're looking for a pull up across the board, really. But this little push through here, did you get caught on that one, Patrick, or did you manage to catch it with the hedge?
I got it with the edge, but my calculation was a little bit so I can't blame myself. I can't really blame anybody else for it. I was doing the right things, just got the numbers a little bit mixed up.
Okay, no, obviously practice does make perfect. One thing I find, a lot of guys, especially with the hedge, sometimes you need to keep going through the hedge to get out. That's why you need margin in your account. That's why we don't show it to anybody that hasn't gotten less than anybody with 1 or 2K. We don't show it to you because obviously you need margin to hedge. With the hedge, the main thing I would say is you need to keep going to outplay the result. If you stop, it's like taking a course of antibiotics. When the doctor gives you a course of antibiotics and he says finish the full course, if that makes sense, because you don't stop halfway through. That's the only thing, but we can work on that anyway to get that up there. But fundamentally at the moment, I'm expecting a turn. You can see fundamentally there's some good news come out from sterling. That's why I'm expecting it to, that's why I expect it's holding these levels. But non-farm payrolls is going to be crucial. So that's what we're going to have to indicate to see whether the direction. Does that make sense? So are you starting to get a bit more confident with the fact that you've got to interpret the economical data so that you can understand which way it's going? Patrick, Stephen as well, just to get a bit of feedback, is that helping you get to a lot more consistency, like you're understanding the levels of it, yeah?
Yeah, well, use it just, the interesting thing to understand is where the market will turn. That's the most important thing for me. So, like,
do you understand how the data is important and fundamentals is important? Because you can see BBC.
Oh God, yes.
Yeah.
Oh yeah.
I think the main problem. These are the main problems I'm seeing from guys at the moment. Just to be transparent, yeah, not singling anyone out or anything like that. One, I think some guys are over leveraged. Yeah. That's me being completely transparent. If you're happy with the risk, I'm happy with it as well, but do understand sometimes you can get caught offside. But as a trader, you should embrace that. Myself personally, I embrace it. The second thing I'm seeing is a hell of a lot of execution error. So people doing it in a rush when they're on the way to work. Now that you'll learn when you lose a big bit of money to start paying close attention to the precision. Does that make sense? Precision with orders is a must. When you place your orders, guys, London Open, whatever it is, you guys need to be going through, modifying the order. So, for example, let's just take an order here. Let's just say we put a sell limit there, for example's sake. Then afterwards, you need to be going modify order. Yeah. Once you're modifying the order, you need to be placing the stop loss of 10 to 12 pips risk, and you need to be putting a take profit. If it's London Open, 1-to-1. Make sense? Yeah. Now, also on top of that, guys, this is the main thing I'm seeing where a few clients are like placing 10, 20 orders and they're getting a little bit mistakey or getting a little bit upset. They're forgetting to put the trailing stops in. And I've seen it on a few P&Ls now, yeah? So on London Open, pay close attention to the orders and placing the trailing stops and placing the not only the trailing stops placing the trailing stops, but also put the take profits and the stop losses in there as well. Sometimes you'll see that the take profits just get hit when the market's moving quite trendy. So everybody start to implement that. I think the biggest thing I'm seeing from the P&Ls is 60% of its execution error. Yeah, just to touch on that point about playing out the scenario. Yeah, I know some of you guys are hedging now as well. Yeah, with the hedging, you have to follow through the hedges until it gets out. So be wary at what you start at. Make sure you guys are starting quite small. When you've got 10 or 20k in account, you can quickly get into 48, 96 lot hedges. Yeah. So be aware of that. Yeah. Yeah, I've seen. We had a client yesterday that took 8 trades at 96 lots across the board. So it can be done. And his account balance is only 25k. Now, what you guys need to start to get into to understanding about, yeah, is it's all about entry. Yeah, this is the major thing I'm going to play on now, especially a few more guys are in the room. Yeah, entry is crucial, especially when you're trading. Yeah, now. I was banging on about this for weeks, months, and days. The first rule, guys, is always sell high, buy low. The only time that rule is invalidated is if the market's moving fundamentally strongly. So when the Treasury decision was coming out. Now that is discretion of the driver. Yeah, because at the end of the day, if you're trying to catch the interim trend, you still need to catch the counter trend, because that's the only way you're going to catch the turning point. Make sense? But take into account the data that's coming out. With the fact that the data for sterling's coming out weak, yeah, the fact that they're not looking to raise the interest rate next week, I would be looking to buy it now, just because of that. To me, fundamentally, is enough information for me to look at it mathematically and say, listen, the news is saying this, it might possibly turn. Don't forget, the news is like a self-fulfilling prophecy. A lot of people watch it, a lot of people read it, so that's why it comes true. And that's something that happens with the media. Don't forget, the media can push the market, because if I pump out one thing to everybody, you guys are all going to hold the same opinion, so it's going to be self-fulfilling. Does that make sense? That's what the banks do. They push you one way and go the other way and take your money. That's what you guys need to start to be made aware of. Now, the only thing that I can see really pushing this up is the weak dollar off the non-farm payrolls tomorrow, if the figure comes in line. Yeah, the figure comes obscured, you're going to see a follow through. But don't forget, news follow throughs. If the news comes out and pushes the market one way, it generally reverts 80% of the time, unless it's a big news event like Brexit or Trump. Make sense? Did you guys get that? Let me just repeat that. Yeah. If you have a big news event, yeah, like Brexit or something like that, and it changes fundamentals, it will change the fundamentals. But if it's something like non-farm payrolls or economical data like CPI or something like that, and it comes out unexpected, it's going to move the market a lot more to when it comes out expected, because traders would be pricing themselves in the market right now. Does that make sense? Now, that does happen quite a lot, guys, so do be aware of that. Yeah. Now, let's just cancel this. Let me just go through the London Open as well. I do apologize if I chop from topic to topic. Sometimes I get sidetracked. But bringing up euro dollar, yeah, where this is now, preempting ourselves for next week, 15-minute time frames. Obviously, my support and resistance has gone off the chart now. Yeah. So what am I going to do now, guys? I'm going to put it back in, because it's going to indicate to me that where the levels are. And don't forget, I use support and resistance as a roadmap in regards to trade management. So I use it to be in a position where I can start to use it as trade management. Never use it for entry, only ever use it for exit. If you get a buy and it takes 2 or 3 of these levels, take the profits. 30, 40 pips in these market conditions is good profits for you as a trader. It will add up, if that makes sense. Yeah. Now, that's me putting my levels in there. Yeah. So I know now if the price stays within these range in this thing, it's moving technically and it's moving a bit range boundy. If it continues down, some sort of fundamental event would have pushed it down. That's why when you're trading, 3 main rules, guys: always trade into open spaces. Yeah, I know it's kind of something which is kind of like common sensey, but generally, unless there's big fundamentals, trade into open spaces because the market doesn't move one way or the other. The only time you go with it is when the fundamentals are strong. At the moment, there's nothing in the fundamentals to tell me that they're so strong that there's just the dollar's going to just continue falling. Make sense? I hope this is giving you guys and conditioning you guys a lot more about the fundamentals. Are you guys a lot more confident? Yeah, Jay, Patrick, Stephen. I know there's a lot more of you in the room now. Are you lot getting more?
Yeah, much
Yeah?
more confident. Just need to learn a few more fundamental things, to be
The
honest with you.
fundamentals, I'll be honest with you, Patrick, it comes from going into the articles and going through the actual news. So, like, when you go into the thing, you start to read them. It starts to give you an understanding of what's going on. The dollar gave back some of its gains on Thursdays. Investors began. This is just crucial stuff that you guys need to start to read. It helps build good understanding. Yeah? All right, just moving on now. Let's bring up the charts because I want to look at some key levels where I'm looking to get in. So here, Euro pound, looking at it on a shorter time frame. There's levels here, there's orders here I'm looking for, there's sell orders up here I'm looking for, guys. Yeah, these levels are good. Do you remember? I'm looking to show you levels that you can pick so that they don't get invalidated. These are the ones in the middle that get invalidated quite a lot, if that makes sense. So these are the ones that start to get invalidated or lose losses. Now, I saw some try, guys. Yeah, one thing I want to just touch upon as well, because I saw a couple of guys try not to hold positions more than 20 pips. Or realistically, for trading supply and demand, is 10 pips. Make sense? If you're trading London Open and the range is 20 pips, then that's fair enough. But if the range is 10 pips, don't hold it anymore. Yeah. The reason why is you kill your element of risk appetite as a day trader if you hold the position to move against you more than 10 or 12 pips. You've put an order in the market. You found out that your order doesn't have any volume behind it. So cut it. It's a bit like cutting your hand to save your arm. It's the most famous saying that is bred across all trading houses. Sometimes in life, you've got to cut your hand off to save your arm. Just because the position's moving against you doesn't mean that you want it to go further or behind you. What it does there is it tells you that your entry was incorrect and that you need to pay more attention to entry. Entry is crucial in the game. If you're applying the first rule, sell high, buy low, that will help with your entries. That's what gets you the entry. It's not it's something which you'll see once you follow the results. Yeah. Now, I know one thing that Paul's playing on as well, which is fantastic, is the Bollinger Band strategy because it helps with mean reversion. So mean reversion guarantees us a move. So, but don't just trade just anywhere, guys. Make sure you guys are playing on entry. Don't just buy here because it's going up. You make sure you sell here and you buy here. It's simplistic. We've gone through this stuff. It's basic now. If you guys are not implementing sell high, buy low, forget about it. And the reason why, guys, I'll repeat it one more time for you guys. Institutions don't buy expensive and sell at a loss. They'll lose money. They buy cheap and they sell high. That's why the price moves from the high to the low. That's who moves the market at the end of the day. Institutions aren't going to buy stock markets at the high. They're not going to buy it at an expensive price. They're going to let it bottom out and buy it cheap. That's how they make money for their clients. And that's a similar sort of things that you guys need to start embedding into your stuff. Otherwise, it's never going to show in your P&L. Yeah. Now, the reason why I say don't hold positions 10, 20, 30 pips is because if you don't cut them for 10 or 12 pips, you're letting it cut your whole hand off, if that makes sense. You need to find out for 10 or 12 pips whether you're right or wrong. As a day trader, that's a fantastic bit of risk because when you keep doing it, the risk reward for what these market conditions move, it's easy to catch 50 pips or 30 pips. And that recuperates 30, 40, 3, 4 losses, guys. Now, if you use that type of risk reward, is crucial for consistency long term. If you guys use 100 pip take profit, risk stop loss, 10 pip take profit, you'll just get smashed in the market. It just doesn't work. The mathematics is not there. You've got to understand, for the mathematics to show in your P&L, there's certain things that you guys need to implement. Risk management is crucial. I know some of you guys on the smaller accounts don't follow it, but as you scale up into the larger accounts to get consistency, so you're not nervous, so you feel that you're trading within your means, risk management is crucial. Something that I will start to work on, especially for the guys that I see value in and that want to trade company funds later on. You need to be risk averse. You need to be trading within the guidelines. Otherwise, you're never going to get big accounts. You can't get a £10 million account from an investor and draw it down 60% and be like, hey, because it just doesn't, the game doesn't work like that, if that makes sense. And those are the type of things that you guys need to start to implement. It's all right if you're practicing and you're learning, but don't stay on those practice and elementary stages for too long, because what happens is so you build bad habits. So with the bad habits comes, if you're losing a tenner or making a tenner, it doesn't mean anything. But if you're losing 10 grand and winning 10 grand, it makes something. And especially as trading, one of the major things I find is a lot of people learn all the skills, but never make any money out of it because they don't apply it. They don't get to their end goal. So for example, some guys want to make 2,000, some guys want to make 10,000, some guys want to make 100K. You need to be realistic in your understanding and plan to get to your results. The smaller deposits, guys, are just there so for you to test the process and test the mechanics. As soon as you've tested it and you've understand it, try to get into the bigger sizes, because the bigger account size, you need money to make money. You can't put £1,000 and expect to turn it into $1 million. It's unrealistic. If you did, I've seen people that have done it, you're lucky. You're not skillful. And that's what comes back to the markets. We want to be using our skills to give us, how should I say it, advantages in the market rather than putting us on a back burner. Now, just looking at it, okay, so that's euro pound, yeah? Euro dollar, just coming into it. I definitely want to be selling from all these levels up here just because the fundamentals are like that at the moment. And I want to be buying down here. Not necessarily this close one, but I want to be buying down here, guys. Yeah. Now, on top of that, dollar Swiss, similarly, just zooming out. Dollar Swiss, there's indications there's massive buy zones here from this spike. Yeah, this is just indicating that there's buy areas here, guys. Yeah, so just be wary of that. That's just because fundamentally it's moving up quite well. I'll probably want to be buying from further down and selling from up these levels up here. But don't fall in love with the sell, though, because it's going counter trend where the dollar's quite strong. But it's dependent on that non-farm payrolls. Yeah, dollar yens, for me, is coming down into a buy zone here. I've already got my other buy orders in below, and I want to be selling it from up there. Yeah, makes sense. Now, cable, similarly, just looking at it, I want to be buying it down here on a second touch, and I want to be selling it up in these levels up here. Just to give yourselves a little bit of clarity. That's it. Now, that's me placing some orders, guys. Yeah, makes sense. That's what I'm looking for myself. Yeah, so be aware of that. Now, just to get a little bit of feedback and things like that. Are the mics gone? Connecting to audio. Can you guys hear me? Can you guys hear me okay?
Something.
Yeah, sorry. Yeah, sorry. It just cut out. I think the internet just went briefly. Can you guys hear me now? Better. It's back. Did you guys miss that? Let me just run through the last bit again then, yeah? So I'll be buying down here, guys, and I'll be selling it up here, yeah? Those are these are the places where I'm looking for. I try to stay away from the middle levels because it invalidates quite quickly. Now, even though I've just placed these orders, be going into the orders, modifying, stop loss, trailing stop. Yeah, with the supply and demand orders, I tend not to put the take profits. I prefer to manage them. Yeah, but then what you do once you're involved in the positions, use the support and resistance lines as guidance in the market for trade management. You know, if you bought in this zone here and the price has gone up 2 to 3 zones, take the profits, 30-40 pips. It's average range. That's how you trade, guys. That will give you guys the thing. That's a lot. That's 60 pips. 2 zones there, I'll be looking to take the profit. First zone, I'll be bringing, I'll be locking in 1-to-1. Second zone, I'll be taking the profit, guys. Yeah. So just while I've got you guys here, anything you guys question wise, anything you guys want me to go through, what are you guys telling me, just to get a bit of feedback? We've got a few minutes left as well. Is there anything you guys want me to go through in future sessions? Anything you guys, just to get a bit of feedback? Talk to me.
No, I think I'm alright now, to be honest with you. Just one thing, you know, the news, the fundamental news. So you're saying, is it best to look at the BBC, the website there,
Okay, so
and also Bloomberg?
Perfect. Let me just go back through that just so it's clear. Use economical FX Street, Forex Factory for your data. Make sense?
Yeah.
Then for your social news, you can use BBC, Reuters, Bloomberg, CNBC. You should be going through them all. One thing I do, which is quite good, guys, I put the apps on my phone. Yeah, and then just get them to make you aware of notifications. Now, if anything big or unexpected comes up, guess what, guys? It pops up on your phone. So it just gives you that little bit of incentive. It's like one way to stay on top of the fundamentals, if that makes sense. Yeah, Bloomberg. So just to get the difference, economical data is different to social news like Bloomberg, BBC, and stuff like that. When you see something across everything in these, so sometimes if something big happens like Brexit, it will appear on Bloomberg, Reuters, BBC. That's when you know it's running fundamentally. At the moment where it's fundamentally talking about some stocks, talking about Trump, talking about little bits of everywhere, the fundamentals aren't playing up. They're not holding, if that makes sense. So this is the only way to get yourself confident about it. But BBC News is very good, CNBC is very good, Bloomberg's very good. Also, our website is fantastic. Yeah, we had this developed. Yeah, it comes from Duca's Copy the Bank. Yeah, it's a live news feed. It's up to date, minute by minute. If you start to see a big move in the market, guys, yeah, just quickly look at the latest news feed, and it will generally be reported there. Yeah. Now, one thing I think you guys are missing out on, because I'm not too sure, a lot of guys ask some basic question. Our trader tools are fantastic, guys. Yeah. Volatility indicator, we've just put that on. We just got the subscription to that. It costs us a little bit of money, but it's crucial because what it does, it gives you an indication of what pairs are more volatile than not. So guys that are hedging, you guys know that you want to be looking at the volatility. You've got economical calendar on there, you've got market strength, you've got the COP report, and you've got the latest news. So sometimes when you see a big move, do look at the latest news. It comes from Duca's Copy the Bank. They're like the competitor to Bloomberg, if that makes sense. So it's a live feed as well. It's as close as you're going to get to a Bloomberg terminal. It's not a terminal feed, but it's as close as you're going to get for a retail feed. So it will help you guys. I know sometimes it's a little bit off. It talks about cross pairs, but if there's something big in there, if you click 4x, it will show up, guys. So just so you guys understand, I think that with all these tools, trader tools, and with all the news things that we've shown you and economical data, that's enough. When you guys start reading, going through it repetitively, that's enough to get your fundamentals to a high level. Yeah, Patrick, does that answer your question? Yeah.
Yeah, it does. Yeah, thank you.
All right, Jay, anything? Stephen, how are you? Bit quiet today. Good. Winning.
Yeah, sorry. Well, yeah, it stopped to break even. It's better than that loss, mate. There you go. I traded dollar CAD on the breakout of the news.
Good. Did you? And it took out break even.
Well, yeah. I considered bullish dollar as come to trend, so at a 1.5. But no, it would have been safe anyway. Seems to move quite nicely. I still have my sell order in there just in case some news comes in, because it's got a bit of distance. So if it moves well, then I have a 5 pip trailing stop on a sell.
Good. Well, I'm definitely liking the level of speak that's coming across. You're taking into account. So it's good. You're showing good improvements now. Yeah. So keep at it, guys, across the board. Jay, anything from you? No? All right, guys. Fantastic. Let's wrap it up. Happy trading. Tomorrow, non-farm payrolls. Expecting technical moves today. Start to use the trader tools on the website, guys, because you're missing a trick there. And apart from that, happy trading, and we'll see you guys soon. Thank you.